When a market turns red and fear takes over, most traders freeze. It feels as if every candle is slipping lower and every bounce is just a trap waiting to pull people into more losses. In moments like this, clarity becomes more important than confidence. This is Shah, and today we are looking at SUI with a calm and structured view, even if the market wants to shake emotions. Coin name SUI. Current price is $1.33. On the daily time frame, the trend is clearly bearish. The candles have been sliding for many sessions, and the structure has now traveled even below the October liquidation wick. That wick once acted as a psychological reference point for buyers who believed the worst was behind them, but the break below it tells a very different story. It shows that sellers are still in control and momentum remains heavy on the downside. When we move to the 4-hour chart, the structure becomes easier to read. The pattern is surprisingly similar to what we recently saw on XRP. Price surged strongly upward, grabbed liquidity, and then began to move sideways inside a range. At first glance, such sideways chop feels harmless, but inside a downtrend, it often becomes the area of distribution where buyers get exhausted and sellers wait for their moment. That moment already came, and the drop confirmed it. Now SUI is resting on a familiar level. The support at 1.31 is important because this is the same level where the previous bounce started. Support levels are not magical, but when market memory is strong, they often work as a base for the next attempt upward. As long as the daily candle closes above this level, the idea of a double bottom stays alive. A double bottom is not just a shape on the chart. It represents unwillingness from sellers to push lower and a slow return of confidence from buyers. If this pattern completes, then the neckline sits at 1.58. A break above that neckline can shift the momentum from fear towards recovery, but this only happens if the daily close respects the support. In red market conditions, fake outs and long wicks below support are common. They are designed to scare retailers out and attract emotional selling. This is why daily candle confirmation becomes the most reliable tool when volatility increases. Direction remains to the upside only if SUI holds the support and begins closing bullish candles with strength. If buyers step in, the market can build higher lows and push toward the neckline of the double bottom. If the neckline breaks with volume, the structure opens the door for a stronger recovery phase. Stay patient, avoid emotional decisions, and let the chart confirm its intention. If you like these calm and structured breakdowns during volatile conditions, keep following for more updates.